Yeah, so I think it was about a 30, if I remember correctly, it was about a 30 to 35% drop, or about a 30% drop on the S&P from there to there. And then again, what's amazing about this is we recovered entirely within a couple months. And so
Yeah,
one of the things to keep in mind is that if you look historically at bear markets without Fed intervention, they last for a couple years. Like here, you had the S&P from 2000 all the way to 2002. That was the collapse. And then if you look at 2008 all the way to 2009, you talked about 18 months. So you really haven't had a bear market since 2009, even though you had a quick sharp decline during COVID. No, for instance, in 2007, right, the highs to the lows of 2009, you're talking, I think it was about a 65%
right.
drop. So much greater, about two times what we saw in terms of COVID. Talking about, we got to basically 480 here, down
Yes.
to, let's say, 300. That would be about, it looks like that would be about a 35% S&P drop, I believe, maybe about a 40%. So it's getting closer, but it's not quite there yet in terms of the size and
Got you.
magnitude. Now, in all fairness, the 2008, 2009 drop was bigger than what we saw in 2000 to
Mhm.
2004. This was a little bit of a less drop. But I think the bottom line is, what we have to remember is that the drop that we're going to see is probably going to be in the realm of this move combined, somewhere with the average of these two moves. So my guess is we got about 50% downside before the
Mm.
market can really solidify itself, which does put us here or maybe even lower.
Now, what was gold doing all these previous times?
Oh, that's a good question. Let's take a look at the gold chart, right? So
Mhm.
remember, during bear markets, the idea generally is that gold does well. And what you could see is that in 2000, gold bottomed out and actually did have a nice move up, and even continued to run higher all the way into 2011. So, I mean, talk about a bull market. That was an incredibly strong bull market. We've then obviously had a little bit of a consolidation kind of. Really, what's interesting is this almost looks like a cup and handle
That's
pattern forming on gold as well. So that's the commonality, right? Is that if the Fed is really printing money, then you would think that they would. But my guess is the Fed isn't going to go back to printing money. Instead, what they're going to do is they're going to do it very, very slowly, because inflation is still elevated. Maybe not 8%, but if you're talking like a 4% number or 3% number, the Fed's not going to want to print a ton of money, right? They're not going to go right to quantitative easing, because then you're going to see inflation go to 20%. So what the Fed will end up doing is they'll lower rates, but they're not going to go right back to that printing. And I think that's the kicker, is that the economic dire straits will keep pressure on stocks because the Fed's not acting aggressively enough. But gold will start to see that safe haven asset where you don't want to be in stocks because they're not going up. But at the same time, the dollar's not going up anymore. Things are not really performing like they should. So gold is the ultimate recipient.
so what would this do to the crypto markets? Obviously, it will.
Yeah, so I think that is also going to be likely where crypto makes a bottom, right? So if we go to the Bitcoin chart here, and again, this is now looking at a really long view of crypto, but I do think there's still downside to go in crypto. And you can see the bear flag on the monthly chart. So midterm, I still think you have downside to 12, 13,000, maybe sub. But I do think when the Fed really gets in that tight spot and you see rates begin to come down, and I do worry that that's the future. We're looking at a future chart of the S&P 500 here.
Got you. Now, I actually bought more gold coins the other day. I know you love them as well. I actually ordered some silver, and I just
Nice.
ordered some silver because I didn't have any. I had very little. What do you think about it?
Yeah, I think silver and gold are good to start to accumulate here. I'm a big bull on silver, as well as gold. Maybe not quite as big a bull on silver
Yeah,
versus gold. I think I like gold a little bit better, mainly because gold does have that industrial side. So if we go into a global recession or even depression, the question is how much demand for silver is there in addition to the store of safety. But having said that, if inflation is here to stay at 4% for the next 5 years, let's say, or longer, if the markets aren't going to perform, people are going to finally say, all right, where can I park my money that is going to be safe and maybe at least get me some return? And I think silver looks good for that. So, I mean, I'm a bull on silver. I'm going to erase some of these lines so we can draw on some new lines here. These are just more on the intraday. But since we're looking at the longer time frame, I would say keep an eye on this chart right here on silver and look at this. So let's take a look. Let's take a look at Cardano here. So this is the weekly Cardano chart. So this isn't going to tell us what that's going to do in the next couple days.
Oh.
The weekly Cardano chart continues to be a concern, and I'll show you why here. And again, I like Cardano, but the chart is the chart, right? The chart is my master essentially, and it bothers me a little bit. You can see this support here, pivot, and right through here. And look, we're starting to peak below that trend line. And so that's a concern. If it doesn't get above soon, Cardano could have another leg lower. You could be looking at 30 cents on Cardano in the not too distant future.
Easy, because it's confirming it. Basically.
Yeah.
It's confirming the breakdown. So either it goes up, what, in the next couple of days?
It could basically, we're now on the weekly chart, so it has the rest of the week. So you basically got Wednesday, Thursday, Friday, I guess Saturday and Sunday technically for cryptos. But if you can't get back above here by, basically you want to get back to about 39 cents by Sunday night, then that's an issue. Then I think you see the bigger sell-off ensue. What you do is you take the lowest point of the head and a vertical line to the neckline. This is called the neckline here. You take that distance, and when you break out, that distance should be how high you go on quant. Well, let's do a test of that. The low here was around $40. The line, when you draw a vertical, was around $140. So now you have a $100 move to this line, which means when you broke out here, you should go $100 higher. Well, the breakout occurred at 125, which means at 225 was your target. Look at that. Look at that, right to the target, and look at the pullback. So it's just some cool stuff how we figure this stuff out in technicals. And you can see, again, for me, I'm not looking to buy this now because number one, I wish I saw this before. I would have shorted it there. But on a pullback, where would I be a buyer? I would look for a retrace to that line and then buy that line. If you could get a retrace to that line, high probability, long opportunity on quant. There are many ways to calculate things out. I didn't do Fibonacci on this, but it would be interesting to see your Fibonacci extensions.
It looks like it can be, just off my head.
Yeah, I mean, I'm not going to pull it up right now, but I agree. I agree. I bet it has something to do with that. And this is the thing, is like people say to me like, oh, well, how does that work? I mean, why does that work? And the bottom line is, subconsciously, we as humans, which are the buyers and sellers in a market, we abide by these nature rules. Fibonacci occurs in nature. These type of measured moves, calculations, it's mathematics. Everything with our bodies is mathematical. So I think you said it was going to stay above. What number did you say it was going to stay above?
I said 17,000 if it breaks 15.6. You said 12,000 to about 10,000, and that was all.
So we haven't
by the end of the year.
Yeah, we haven't seen the break of 17.5, although we still have 2.5 months left. So there's still a lot of time. If we think about just here alone on Bitcoin, it went from 31,000 to 18 in about, what was that? 2, 4, 6, 8, basically 10 to 12 trading days. So